This is Free to Exchange, the show where free-thinking scholars, free markets, and, ironically, free public television all meet. I'm your host, Ben Powell. On today's episode, we're going to discuss the impact that Wal-Mart and other big-box retailers have on local communities. Many communities have tried to prevent Wal-Mart from opening new stores because they fear it will harm mom-and-pop businesses and damage their community. But my guest today thinks these fears are misguided. Then, on the second half of the show, we're going to discuss insider trading of stocks. After all of the crony capitalism associated with the financial crisis of 2008, my second guest has a really unique take. He thinks we'd be better off if we legalized insider trading. Let's get started. My first guest is Dr. Richard Vedder. Dr. Vedder is a distinguished professor of economics at Ohio University, and he's co-author of The Wal-Mart Revolution: How Big Box Stores Benefit Consumers, Workers, and the Economy. Well, welcome to the show, Rich, and to Texas Tech, and thank you for joining us.
Glad to be with you.
All right, so people have lots of objections that they raise to Walmart. They'll say, it's this, this smiley face, logo, and they say it really should be a frown for the evils that it inflicts on a community when it goes in, or how it treats its workers. Let's talk about some of these things today, because you wrote a book on Walmart recently here, The Walmart Revolution: How Big Box Stores Benefit Consumers, Workers, and the Economy. So let's start with that. Want to start with how do they benefit consumers?
Sure. Walmart, I think, has had a very positive effect on the American economy. I sometimes say that it is one of the most effective anti-poverty devices that we've ever come up with in our country, meaning more effective than what the federal government does, because Walmart found through various innovative ways to cut costs of providing goods and services to a wide variety of people. And a large percentage of Walmart sales are for middle and lower income groups. And they've gone into communities where previously people had relatively little choice. And Walmart came into a lot of little towns of 10 and 20 and 30,000 people, and suddenly life changed. You didn't have to go just to the local hardware store, this little dinky, what we used to call five and dime or variety store. You had now a lot of choice. And you say, the studies show prices came down on average maybe 4 or 5% below what they otherwise would have been without Walmart. So if
that's effectively a 4 or 5% raise.
Yeah, so 4 or 5% raise in a family. Let's say they spend $10,000 a year at Walmart, and then remember you're buying groceries and stuff. That's $400 or $500 to a low-income family. $400 or $500 is a lot of money. That's better than they've gotten out of the federal government, and so I think it's a pretty cool thing. Sure, Sam Walton and his family at one time were the richest family in America. By the way, they've given a lot of their money away to charity, which is something that's seldom pointed out. When Mrs. Walton died recently, she left $18 billion to charity. But so, they made a lot of money on this. But in making money, as Adam Smith said 200 some years ago, they were helping society. They were providing lower cost goods to poor people. They were providing jobs for 1.5 million Americans. There's more people working at Walmart than there are soldiers in the U.S. Army.
Wow.
And so Walmart has been a powerful creator of jobs. Walmart has saved a poor people a lot of money.
So let's transition then into talking about these jobs, because some people will say, well, sure, it creates jobs, but these are bad jobs. They don't give their employees enough benefits or health insurance. They don't pay that high, or heck, they're not even allowed to unionize or something like that. How is it good for the workers?
Well, what would these people who work at Walmart be doing if they weren't working for Walmart? First of all, a lot of them were working at other stores to begin with. Walmart pays roughly the average wage in that industry, retail trade. Retail trade workers are mostly unskilled workers with relatively little experience, and they mostly make $10 an hour, give or take $1 or $2. And Walmart is paying those kind of wages. Walmart is providing limited health care benefits and so forth. Of course, that's been all mixed up by Obamacare now. But Walmart has a decent record. And if people say that, gee, they ought to be unionized, well, we have we have laws. We have the National Industrial Recovery Act, or well, we have that, but we have the Wagner Act, which allows workers to vote on unionization. The workers have never voted to unionize. The workers, bottom line, don't want a union.
And of course, that's been a trend over the last 30, 40 years in the United States in private industry unions going down because workers don't want them.
Yeah, in the private sector, putting government workers aside, we're down to around under 10% of the labor force is unionized now. So in fact, a large portion of the opposition to Walmart that has been stirred up by unions that are unhappy that they haven't been able to take on this million employees, receive dues from them, $100, $200, $300 million a year in dues. They haven't been able to get that. So they have spent a lot of money to argue that Walmart is bad for society, that it treats its workers poorly. And there are other arguments too. They ruin the communities they come into. They're environmentally disastrous because they build these awful looking stores. I mean, these arguments are commonly made.
You know, I bet you those same unionized workers making that argument also shop at Walmart, or their wives do.
Oh yeah, I suspect they do. Yeah.
So let's take the part about the community. I do think the stores are kind of ugly, by the way, and it kind of stings my eyes when I go inside sometimes.
Yeah.
But the local community, they'll say it kills mom and pop stores, and this is bad for our local economy.
Well, you know, it has killed some mom and pop stores, but why did it kill them? Did Walmart come in with guns and shoot up the people who own the other stores and say if you go out of unless you go out of business where your life is in danger? No, people voted with their feet to go to Walmart instead of the old stores. The new store, Walmart, was superior to the old store. It had larger selection of goods, lower prices typically, and was superior in many ways. So some of the old stores closed. By the way, this has been going on throughout history.
This is how Henry Ford killed some of the carriage
Henry
makers.
Ford and earlier Penny's and Sears replaced stores, and earlier in history the department stores replaced old peddlers. Throughout history, every generation we find. Now Amazon and eBay and so forth are hurting even Walmart because we have found new ways. Society our American economy is constantly innovating, even in retail trade. And they were a good innovator in their time. They still are, but they were particularly good in the 1970s and 80s and so forth.
And other people have mimicked what they did.
Yeah,
now,
and
right?
I was exactly, Target and Best Buy, and we could go on and on. The big box store, actually, Sam Walton, who was the starter of Walmart, wasn't the first builder of big box. The same year Walmart was founded, Kmart was founded. And Kmart came from a company called S.S. Kresge that had some money. Kmart was 50 times as large as Walmart in 1962. And Kmart is a shadow of Walmart today. And it's because Walmart was successful.
So let's look at some other aspects of Walmart, because they're not all just squeaky clean. We're at a show here sponsored by the Free Market Institute at Texas Tech, and most of Walmart's success is a great free market story. But is there any place where they deviate from just being a good competitor?
Well, the Walmart, like any company, is probably prone, and there's some evidence this has happened on occasion, to accept you might call food stamps for corporations, corporate welfare. A community wants a Walmart to come in, so they say, we'll give you a tax break if you move into our community. We'll give you a tax abatement for 10 years. You won't have to pay. We'll build roads to your store that are specific to your business as an inducement to get you to come to town. And so there are government enticements to corporations that, you could argue is unfair to competitors and all. That is happening in some cases.
Yeah. Now, I knew of one case where it was in the opposite direction. It was this little town called Hercules, California, that was using eminent domain to take the land that Walmart was trying to build on because their community thought it would be undesirable for their image.
Yeah, exactly. This is a big thing. Some communities think, we are too good for Walmart. And indeed, it's a very discriminatory, elitist kind of thinking, a very anti-American kind of thinking, the way I look at it. We don't want Walmart in the community because there goes the neighborhood.
Right.
It'll lower the neighborhood. Another sort of similar kind of thing is political pressure has been put on in several cities. Chicago is one, New York is one, where the city council would pass a law saying any company with $1 billion or more sales, or they make a law that essentially defines Walmart and says that they can't build in the cities. And there's been Chicago had some big battles about. And the poor people, the local people, and middle income people in Chicago wanted Walmart. It's another option. People prefer more options to fewer options, and that's something that many people.
And has Walmart ever been on the other side of that, where they've used eminent domain or regulation to take property, or?
I am not aware of that, Ben. It's possible. It's possible. Walmart's not perfect. And by the way, when they were getting beaten up pretty bad by the unions, and the unions were very effective, I might add, for a number of years, and Walmart was on the defensive, they brought in a group of public relations specialists, Walmart did, and started trying to make concessions, showing that we are community-minded and so forth, as an attempt to improve the public relations environment, which is, by the way, no different than John D. Rockefeller had the same 100 years ago with a Standard Oil Company, which did a lot of good for American society, but it was being vilified by many of them. The vilifiers were the competitors.
Sure.
And we have the same thing going on with Walmart today.
So the big message here is they're part of the competitive process and are an innovative firm like anybody else who's made consumers better off and made society richer.
Yeah, it's an American success story.
Well, Rich, thanks so much for joining us today. Up next, allowing people to trade stocks based on inside information actually improves our economic performance? Our next guest thinks so. Stick around. We'll be right back.
Free to Exchange is a joint project of Texas Tech's Free Market Institute and Texas Tech Public Media. More information is available at fmi.ttu.edu.
In the blink of an eye, the world has changed. 30 years have come and gone. There have been wars and peace. Justice has been served and denied. Fortunes won and lost. And we've watched it all. On big screens and small. In the blink of an eye, it will be 2043. In the next 30 years, wars will be fought. Economies will crash. People will rise up. Nations will fall. And technology will evolve. Each new generation makes its own history. And a new generation of Frontline will be here to tell it. Frontline. Thought-provoking journalism, wherever and whenever you find us.
Welcome back. Joining me now is Dr. Alex Padilla. He's an associate professor of economics at Metropolitan State University of Denver, where he also directs a project near and dear to our hearts here at the Texas Tech Free Market Institute, the aptly named Exploring Economic Freedom Project. Surprisingly, Dr. Padilla earned his PhD in France, but despite that, he's still a big supporter of the free enterprise system. Alex, welcome to the show.
Thank you for having me.
So I guess we should start with just defining what it is we're talking about. Insider trading, what does that mean?
Well, it means people that work for corporations are going to use non-public important information about the corporation that might affect the stock prices, and they are going to make profit out of it. So they either buy stocks and resell them when the price is increasing, or they are selling the stock they are having.
Okay, so this is like, it would be employees of a corporation typically trying to day trade in that own corporation stock or doing futures or options or something related to it?
That's correct. In general, for example, if you have an impending takeover, people are going to buy the stocks because they know that usually when you have a takeovers, prices of the stock go up, and when the prices are up, they just sell.
And of course, employees can buy stock in their own companies and such. It's just there's rules for how they do it so that they're not allowed to use this inside information.
Usually they cannot use based on inside information, or they cannot communicate that information to their family members and friends. So they can
so
make
none of that like
profits.
whispering, hey, I got a tip for you, man.
That's correct.
Doesn't work
That's
out like
right.
that. All right. So I think, I mean, most people in the general public would say, of course, that's a bad thing. And it's a bad thing because it's not fair or something like that. But economists who have worked on this, a lot of them have reasons that they believe that this isn't right. Why do economists think that they shouldn't have these laws?
Well, the debate is not settled. I mean, there is pros
I
and
know
cons.
it's not. You participate in it.
Pros and cons, but I mean, some economists like Henry Maney think that insider trading communicates information to the markets without revealing the information, the nature of the information per se, which leads to a better price system. And the better is the price system, the way of the price system to communicate that information, the more accurately will reallocate investment. So for example, if a company is going to go bankrupt and you sell your stock, you are technically avoiding losses, and it's in insider trading. But you are sending a signal to the market, don't buy that stock, don't allow that stock to stay at a high price, because if the price is high, people might make investments in a corporation that is not valuable.
Okay, this sounds like an argument I've heard you made before. Basically, prices in the economy convey information. They tell us about how much something's desired. And usually we think about it as like a good or a service. A high price means it's relatively scarce, we shouldn't use so much of it, and we should try to make more.
Yeah.
When it comes to stocks, a high price is signaling this is a valuable company. A low price, this is not a valuable company.
In general, that's what it is, yes.
And we want those prices to be right.
We want those prices to be accurate, right? It's a very Hayekian model of a division of knowledge. Actually, those insiders are in some extent entrepreneurs that in their decisions send a signal to the market that allows the market to be more efficient.
So this
or
is
less inefficient.
This is basically your argument then is if you can't use inside information, the price of the stocks is wrong.
That's correct.
But if the insiders trade on this, it might give them an advantage over other people, but it makes the prices more accurately reflect the underlying realities.
Yeah. Of realities of what the corporation is, right? So the entire financial economics, when we talk about efficient market hypothesis, which is, for example, stock prices are very efficient, so the probability you make profits out of those stock trading is very low. But if you don't have insider trading, well, the information is not very accurate. And if you have people that do insider trading and can make profits out of it, it just means that the price system is not very efficient.
So because of this, do you think we should let people trade on inside information?
So there's two, my main argument usually is kind of simple, is that can we prevent people from doing it? Yes, we can, but how much? Not very much. There is a widespread insider trading.
You say right now there's widespread insider trading because we just can't monitor it.
Yes, and only catch the big fish that become very arrogant and think they cannot be caught. But usually there's a lot of insider trading. People are aware of it. People keep investing in the stock market. People keep, So therefore, it means that insider trading does not deter other people from investing in the stock market,
because that's what one of the economist objections would be. They say, if you can trade on this inside information, other people aren't going to want to buy because they think they're going to get the raw deal or something, right?
That's correct.
But you're saying it already happens.
It already happens. And more importantly, the second part is, even if we deter some insider trading, how much does it cost to the taxpayers to deter insider trading compared to that benefit of preventing insider trading? I mean, there is not... Some people argue that...
And the SEC costs to this are large.
Yeah, very large. And they're large and very complex. There's a complex rules. The laws have changed over time based on Supreme Court decisions. There's new financial instruments. There's new techniques to allow people to trade on inside information. And therefore, that costs a lot of money to the taxpayers and is not certain that you have a huge benefit. At least you do not discourage people from trading when you have insider trading. And when you don't have much insider trading, it doesn't encourage people from trading more. Right? The argument that because you have a ferocious enforcement of insider trading laws, people are more investing in the stock market is kind of not totally true, because the data show that there's a lot of insider trading taking place.
Was insider trading always prohibited?
No. It started in the 1934 after the stock market crash during the Great Depression, and the first insider trading laws came in 1934. And the first real enforcement was in 1966.
So really until 1966 it wasn't
it was more at the state level, but it was not widespread insider trading. The federal government was not very much involved into it. No, but there's an important part you have not asked me is about the question.
Well, you tell me, Alex. What should I ask you?
You should ask me who are the biggest insider traders in the U.S.
Back to you.
The Congress, people from the Congress. It has been shown that people from the Congress benefit a lot from those confidential information, because a lot of the lobbyists make deals with Congress people that says, if you give me that law, I give you some tips. And they are aware, they have a lot of committees and financial committees within the Congress where they come across tons of confidential information and mergers and things, and Congress people trade a lot on inside information.
And they have another inside information too, is they know more about what legislation's about to pass or fail.
That's correct.
And could trade stocks based off that.
And it has been shown that Congress people make a lot of profits resulting from inside information.
Is this illegal for them to do it?
So there's an interesting law. In 2012, if my memory serves me well, I might be off on a couple of years, they passed a law in the Congress that says congressmen and women cannot trade on inside information.
Because before that they were allowed to?
Yes.
These hypocrites passed these laws that said no one else can, but they could.
Yeah, that's right.
Okay.
But so they passed that law that say they will be ineligible for a federal retirement, their money or retirement, they will be prosecuted. But amazingly, in 2012, after the current president was reelected, they sneak an amendment that eliminated de facto that law, so now we can still trade on insider trading, on inside information.
Wow. All right.
But people don't know about it.
So back to good for the goose, but not for the gander here.
That's right.
From our rulers in Washington. Well, how about if, we're almost out of time here, so one last question about if we legalized insider trading, and some companies were fearful that it would lead to people not investing in their stock because they don't trust them, could there be a market for self-regulation that would regulate insider trading in those situations where it's necessary?
I agree with that. I mean, you could imagine.
Well, how?
You can imagine stock exchanges self-regulating themselves, having laws that says in our stock exchange insider trading is illegal. And by the way, the SEC use the computers of the stock exchanges to detect insider trading. They use the computer softwares that detect abnormal trade volumes and abnormal price change that triggers alarms that says insider trading has taken place. So I mean, the government is only using private system, private mechanism, the private innovation, right? The tools that the stock market are using, because the stock markets are required to report to the government suspicious activity. But you could imagine stock exchange doing it, and you could imagine institutional competition, right? And you will have harmonization of rules as we can see which rules are the best in terms of to attract investment.
Right. We basically have a market to discover what rules we should have, because if, let's say the NASDAQ allowed insider trading, but New York Stock Exchange didn't, and we saw stocks outperforming on NYSE, then people might start moving over.
That's
and then NASDAQ would say, oh, we need that. Or maybe you'd find it going the other direction, and the other one would change their rules.
And there's a counterfactual, an anecdotal evidence for that is that the Australian government tried to complain to the New Zealand government that New Zealand didn't enforce the insider trading laws, and therefore the New Zealand stock market had more investors than the Australian stock market. So they tried to have inter-government discussions that was not fair, that the New Zealand government did not enforce the insider trading laws while the Australian was doing it.
Well, Alex, what you've been telling us, I think, is probably controversial to most people, and seems like it cuts against what they think is fair, but it seems to me if we're going to find the optimal rules, I'd trust a market to find out which type of regulation works a heck of a lot better than I'd trust those 535 guys in Washington, D.C.
Yeah, that's correct. That actually are breaking the law
that are themselves breaking this law. That's a great point to end on, Alex. Yeah. Thank you so much for joining me.
Thank you. I appreciate it.
Well, I hope you enjoyed today's show. On the first half, we learned how Walmart benefits the economy that it operates in and helps us out as consumers by bringing us less expensive products and helps the workers off by providing jobs. In essence, it's just part of the market's process of competition. And the second half was a little bit more controversial, I suppose, hearing about how insider trading might actually make us better off. I don't know whether it does or it doesn't, but the last suggestion the guest had of allowing different stock exchanges to decide whether they want to do it or not seems like a better way to find out which way works better to me than just trusting members of Congress to know who themselves are insider trading. See you next time.